Hey everybody, this is Jose Blasco. We are about to start in like 40 seconds. So this is a sound check. Please go ahead and use the chat box to type a quick hello. And if you were to do that, I will understand that you hear my voice, you see my screen, and we are ready to start. So please go ahead and confirm that this sound check is working well. Wonderful. Thank you so much. How are you, Eric? Good to see you. Very nice. Okay, good. Perfect. So we just reached the top of the hour. You can see the sound is good. Technology is on our side. So we are ready to start. Very good. Lisa, good to see you. Miki, a pleasure to see you all, and very excited to get together today to talk about options and longer term trades, since we didn't have a session last week for longer term trades, and therefore this week we are catching up. We'll have two sessions for longer term, which is today and tomorrow. And again, I love trading all the assets, as you all know. But you may have also realized that I got a little special thing for options, given their versatility. There are things that we can do with options that we cannot do with other assets, and that is fun. Okay, so very excited to be your guide today to talk about longer term trading. The key asset will be options, okay, and therefore let's get started. So today is the 22nd of August 2019. I didn't say it, my name is Jose Blasco. I'll be your guide. Again, today's session is about longer term trading, meaning anything above and beyond intraday. And before we start, to have the session properly introduced, we have a disclaimer, which I will read quickly. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And this again brings us to the end part of the introductory slide, which allow us to now get and jump into TradeStation and begin the session for today. Okay, so let's begin. As always, we have a beautiful scanner in this particular window. I have been running the scanner before the session started, and as we always do in the longer term sessions, we focus on directional trades, long and short. And then also we focus on non-directional trades, even though for non-directional we got three types, isn't it? The purely non-directional, which is the one we like the most, and we normally start with when looking at non-directional trades. And then we leave the non-directional, I didn't point at the, let me redraw the lines, I didn't do it correctly. So we got the directionals, okay, here we go. And then the non-directionals, where what I was saying is that the pure non-directional is the one on the top. Okay, now I got it right. And then, we also, if we don't find anything purely non-directional, then we look at the neutral trades, okay, which can be slightly bullish, slightly bearish, and we can plan trades this way as well, okay? Alton, good to see you. Very nice to see you all, guys. So let's begin with non-directional trades, okay? And let's go ahead and look at what may be available, okay? To be able to plan the non-directional trades, apart from TradeStation, I need another supporting tool, which in this case is gonna be a website. It's gonna be the website briefing.com, which I am loading on my other computer screen as we speak, and I will bring it into the main screen right now. Okay, so it's loading right here. Okay, so briefing.com is a website that we're going to be using to check on the earning dates. Okay, I want to have a quick reminder, since it's been a little more than a week that we haven't got together to do longer term trading. Oh, it seems that they have okay, interesting, they have it seems that they have updated the interface for the website. So, and even though I use UFOs, I am not a robot. So let's go for login. That was a pretty bad joke, isn't it? Anyway, so yeah, so we got it. So yeah, so it seems that they have updated the website. So this is the first time I see this interface. Yeah, okay. So new interface for briefing.com. Here we go. So anyway, I was saying that, yeah, so let's refocus here. So we are going to start the session with pure non-directional trades. Since we haven't been together for a while, for like a little over a week now. So what I wanted to say is that all those different opportunities that are potentially available here, found by the scanner, they all imply a high level of premium in those options. And in one hand, that's great, but in the other hand, there may be a reason for that. So that's how, and that's why we're going to be using this website with briefing.com to keep looking at those specific earning dates to make sure that the reason for that high price in the value of the options that belong to those 18 stocks, the reason is not earnings, okay? Because earnings obviously are a problem for non-directional trades, since earnings often produce gaps, okay? Which is the complete opposite of what we're looking for, okay? Alton, not a robot, but you are teaching us to be robotic. You are absolutely right. And you know what? Maybe I am a robot. You never know. Yeah, anyone is a fan of Battlestar Galactica by any chance? I mean, there were 5 guys there that were robots and they didn't know until the end, isn't it? Anyway, I think this is second back joke of the day. Even though if you're a fan of Battlestar Galactica, you surely have a smile on your face right now. Anyway, so let's keep going here, okay? So we have a collection of stocks here. When we look into those stocks, as I just said, we need to make sure that using briefing.com, we'll make sure that the reason for the inflation of the premiums is not earnings. And the other thing that we will be doing as well with those stocks, it's go over those particular stocks to also look at the chart setup, thanks to the UFOs, to understand if we do have an opportunity or we don't, when it comes to having the price remain range bound. And on top of that, what we will do as well is I will be loading, let me see. Oh, okay, it's not loading it for whatever reason, so I'll do it manually. We will be loading as well Option Station Pro, because what I will want to do here is also to use the statistics tools built in Option Station Pro that will allow me to do certain measurements of price and do certain projections, so I can use mathematics to anticipate what is a reasonable range of price for that stock, and then make sure my UFOs confirm that. So that way I would stack probabilities in my favor for a non-directional trade, okay? So again, this is a quick summary of things that probably you already know, but just to have our mindset in the right place. And by the way, if you are joining this session and you are not in a regular basis, you're not part of our sessions with options. So what I just said may be slightly confusing. So just follow me, because as I do it, you will see it. You will see it makes sense. Okay. So we'll start with Autodesk. Okay. So I'm just clicking on that symbol so we can have the 55-minute time frame to load ADSK. I also want to look at the earnings reports. Okay, so yeah, I'm having a little bit of a problem here because because of the change of the interface, it doesn't seem to be giving me the information I was expecting. So let me see if we got earning calendars here. Maybe they have changed the format. Okay, so what I would really want to do, guidance, stock splits, economic, yeah, so earnings calendar would be what we're looking for. The only problem here is that it's giving us, again, I am improvising with the website since they just changed the interface. It was not like that the last time I used it. So ADSK, if I load it here, okay, so that's the same as before. Yeah, so I believe that probably they have probably come up with a different set of options. And yeah, I believe that this search is probably the same. Yes, it is. Calendars, I guess it's going to be the same as well. Wow, interesting. They have totally changed this website, which if that's gonna be the case, it's gonna become much less useful than what it was before. Okay, so plan B, I have it here, which is Yahoo earnings. Okay, and if I type ADSK, so let me see what we're gonna have. Earning dates, it's gonna happen on October 22, October 28. This is gonna be the expected range for that earnings report. Okay, so at least, you know, with Yahoo Finance, we can see that information, which is why I have it saved as a bookmark in my browser. But really, you know, I'll be looking into the briefing.com, and hopefully, you know, I can find a better way to do it. Okay, yeah, Brian, I see that you encountered that problem as well. Chuntang, you're saying that earnings are on the 27. Wow, that's interesting, because if that's gonna be on the 27, but it doesn't show here with Yahoo, so that's really not a good thing. Interesting. Okay, guys, give me a second. I'm sorry to have encountered this little problem here. Just bear with me, guys. I just want to make sure that I find, you know, the best way as possible for us to be able to be running the session as efficiently as possible. Okay, I have another website here for earning, which is Whisper Number. I have encountered sometimes with this website, I have encountered problems with data that was not 100% accurate. So I'm not a massive fan of Whisper Number because of that. Maybe this doesn't happen anymore, but since it happened to me in the past, so obviously this is the sort of things that you remember, isn't it? Yeah, so I'll bring Yahoo again. Okay, so it's taking a long time. Okay, so yeah, so earnings. Find earnings for symbols, so ADSK. Maybe I should have typed here before. Yeah, that would have been a much better way to do it. Okay, so yeah, so let's do this. Okay, because Yahoo, I found Yahoo through time to be quite accurate. Okay, I trust Yahoo more than Whisper Number. Again, these things, you know, it's just based on experience. You know, through time, through years actually, I've seen briefing.com to be very accurate. I've seen Whisper Number to be less, and Yahoo almost as accurate as briefing.com. So that's why I use the word trust in here. Okay, so basically, if you were to use this URL, okay, and let me go ahead and give it to you here, which is finance.yahoo.com/calendar/earnings. So if you were to use this URL, and then right here you have find earnings for symbols, and you were to type ADSK, which is the symbol we're looking for in this case, then this would give you a measurement. It will give you a table with the specific dates, okay, which in this case we can clearly see that the next date is going to be August 28, okay, and August 28 is not a really good news, because August 28 happens to be next Wednesday. August 30 would be next Friday, so we are ideally looking for earnings reports that are at least beyond August 31st. That's what we're looking for. Or alternatively, if August 28 is going to be the earnings date, then we can try to make the trade work using August 23, which is tomorrow's expiration, which in most cases that would not work. Okay, in most cases that would not work. But if it does work, it's worth it. Okay, and because ADSK is a stock of a pretty high price, okay, which is $145 per share. I mean, it's not like it's super high. It's not like Google, for example. But what I mean to say is that it's not like a $15 or $20 stock. So we may, if the UFOs are close enough, we may find an opportunity using tomorrow expiration. I always like to explore if that opportunity is available, because if it is, it becomes a very high probability, because the speed of time decay from today until tomorrow is massive. and therefore, I do welcome those trades. Okay, so I'm gonna look into it, knowing that most of the times when you look at 2 days to expiration, you almost never get enough premium. Okay, but we'll do that. Okay, so you have Finvis being on the 27. Yeah, interesting. And this is what's bothering me a little bit, Al, because again, I would be very comfortable looking at briefing.com figure, and the problem is that I was not able to find it. So I'll be looking into this, and tomorrow, since we're getting together again, hopefully I'll have a solution. Okay. But anyway, for today, really it doesn't matter if it's 28 or 20 or 27, because basically it's either we find a solution using tomorrow expiration, or then it doesn't work. Okay, because again, we need either after 31st, or we need to stick with tomorrow expiration date. Okay, so anyway, so let's go ahead and use Option Station Pro. I'm gonna input ADSK as well. It's 9:15 Eastern time in the morning, so I have limited time to do this. I got 5 minutes to do a little bit of an analysis here. Okay, so what I'm gonna do is I'm just gonna use August 23rd without even thinking. You've seen me do that before. I would just right click, analyze sell, and just input an iron condor. And the reason why I do that without thinking is because my only intention when doing so is to go ahead and change the values plus and minus 5%, change that to plus and minus 1 standard deviation, because this will now tell me that from today until tomorrow end of the day, that stock has a potential range to be between 144 and 148. Okay, so now by keeping those two numbers in mind, 144 and 148, I will then move into my chart. Okay, and first look at my sessions. With the regular session, notice how the UFO performance stats are 51.75. So if I move to pre and post market, this becomes 43. So in this case is less good. So we're gonna use regular session. And by looking at regular session, so what I would like to do now is look at the 148, okay? And also look at the 144, okay? And what I need to find, it's a UFO above and a UFO below, okay? So the UFO below, this would do. Okay, the UFO above, unfortunately, yes, we could use that one because it's 148.10, and based on the calculation, it was 147.83 and 143.99. So both 143.45 and 148.15 are smaller values. Okay, are smaller values. Now, I have to say I'm not too comfortable doing the trade this way, because even though statistics and UFOs are in my favor, which certainly justifies the trade to be taken, the problem when you compare a 2-day trade, which is non-directional, compared to a 1 week, 2 week, 3 week trade, which is non-directional, is that we can get into damage control mode when we use multiple days to expiration. Isn't it? We can butterfly an iron condor and give ourselves a little more room for the trade to work if the trade started failing. But if the trade is going to be only for 2 days, well, there is no room for you to butterfly it or do anything. It's either it works or it doesn't. Okay, and therefore having my lines so close, and again so close based on stats is good enough. But what I mean by so close is that I only got 1 UFO to defend myself. Okay, if I had 2 or 3 UFOs above and below, I would feel more protected. But because there's only 1, I'm really not a fan of this trade. Okay, so what I would really like to do is to move to the next UFO so I can have 2 UFOs to defend myself. But now when I look at the 152.7, which is going to be 153, my question, the big question mark is, will you get premium enough? Okay, and the answer is no. If you use 152.5, you get 6 cents. You probably remember the rules where we are shooting for 35, and the worst case scenario we would accept 25, but certainly not 6. Okay, certainly not 6. Okay, so yeah, that's it is not ideal at all. Okay, it is not ideal at all. And if you want to take this trade, then you would have to rely on this particular UFO, which again, the problem is that we only have 1 UFO to defend ourselves, meaning that if the price begins trending either up or down, that's it. You're gonna be surpassing your purple line, and you're gonna get into the losing territory in this non-directional trade. So makes sense to do it purely based on stats, but having only 1 UFO to defend myself, then I'm not happy and I'm gonna suggest to not to do it. Okay, if you want to do it for practice purposes, go ahead and do it, but I would recommend in this case to not to utilize real money in this trade because of what I just explained. Okay, so this will bring us into the next trade, and I'm just looking at all those symbols from up to down. So what do we have? INTU. So I'm not really sure the liquidity is gonna be okay with INTU. Since I had traded options on that stock, but not too many times. So right now, out of memory, I'm not sure about how liquid INTU is. So let me check that. Hopefully the option chain is not resetted yet. Oh, it's just resetted. So we're gonna have to wait until when the market opens to find out. Okay. So let's do this. Okay. Since we are waiting for those 10 minutes. Okay. We're gonna be looking at a bunch of symbols here. And what I would like to do is, I just added an extra letter, just discard the stocks that are not needed. So for example, so with INTU, you can see August 23, and that is tomorrow. So obviously we cannot do INTU, so not even need to check. What else do we have? Johnson & Johnson, that's normally a very liquid stock with good options. So let's go ahead and check. Normally volatility and therefore options premiums are quite decent with Johnson & Johnson, given the fact that it's a company which is biotech, not purely biotech if you wish, but is related to drugs and so on. And normally there is always a premium built in this type of stocks. Okay, and in this case, it's nice to see because the next earnings is happening in October. The prior one is happened already in July. So we have nothing in front of us when it comes to planning a trade on Johnson & Johnson. So the question is, how does the chart look like? Okay, and the chart actually looks pretty nice in the sense that we already have 56%. Just by looking at a regular session. If I do pre-post market, what do we get? Okay, so it's loading. Remember, we normally need at least 50%. So we got 54%. So 54 is good. Okay, 56 is better. So we're gonna use regular session. Okay, and we do have multiple UFOs above, and we do have multiple UFOs below. So later on, we'll be running the process on planning the trade on Johnson & Johnson. That definitely looks like it could be a valid candidate for a non-directional trade with nothing concerning, around what's happening to that stock, at least for now. Okay, so that would be a good candidate. Keys, I never traded that one, so I would like to see what's the liquidity on that one. PEG, that could be interesting as well. WPC, yeah. So I need to wait for the market to open to be able to see the liquidity of those stocks, because even though all those stocks meet our rules and our criteria, I believe that not all of them are gonna be super liquid. Okay, and therefore we may waste a little bit of our time by planning trades and then just discover options are not liquid enough. So what I'm gonna do is when the market opens, the first thing I'll do is to plan a trade on Johnson & Johnson for non-directional purposes, and then we'll look at other markets to see if they meet the rules, and we can also plan on a trade. For now, out of this list, okay, the ones that start with I here, ICF is an ETF, as you can see. IJJ is also an ETF, as you can see. Okay, IJK is also an ETF, as you can see. So we got multiple ETFs. XLK is also an ETF, and then almost all the other stocks, but Autodesk on the top, almost all those stocks, it is my understanding that they may have limited liquidity. Oh, by the way, I am missing on BBY. That one definitely has liquidity. I didn't realize BBY was there. So Best Buy. That is a stock that is decent from a point of view of liquidity. Earnings are happening on the 29th. So if we were to do a trade with BBY, it would mean that we need to use tomorrow expiration date. Okay. And the problem that we have with BBY is that now we are dealing with a stock which is $67 per share. And let me tell you that with $67 per share, I would say it's quite unlikely that we're gonna get premium enough, okay? Unless something important is happening, which may be happening because this stock seems to be moving 1.82% up in the pre-market session. So look, we'll take a look. It doesn't hurt. It just takes a few minutes to look to see if the trade works using tomorrow expiration. Again, as I said a few times, almost always when you do this exercise, you realize that you didn't get premium enough. But the times where you do get premium enough and the trade is justified, it's close to risk-free. Okay, so it's worth it to check, even though it's you will get many no's by doing that. Okay, Al, one standard deviation on TradeStation is significantly different than yours. Any thoughts? Okay, so let's go ahead and compare. I remember in the last session we had Bojan as well making that comment, and this, unless there is a bug, can only be because of our settings are different. Okay, so please go ahead and open your settings. Okay, and you guys can do it with me all together as we are waiting for the market to open in 5 minutes, so we can do this together. So I would like you to open the settings, which is that little wheel on the upper right inside TradeStation Pro, and the first thing to check would be the common tab. And I would like to make sure that all of you have 89 for historic volatility. By default it comes with 90, but I think you all know why I changed it to 89, isn't it? Options volatility source, we're using implied. Interest rate, we have it as automatic. Price model, we don't use Black-Scholes. Okay, we are using the Bergsund and Stensland, which is always difficult to pronounce for me. We have use midpoint as price, and everything else is not relevant for this calculation. Okay, so please make sure what you have is like me. Okay, then I will ask you to confirm on the chat box as well. When it comes to the graph, it's important that you have now to earliest expiration. It's important that you have that. Okay, when it comes to option chain, expected move calculation, I have selected pessimistic. Okay, pessimistic. Everything else is irrelevant for the calculation. Okay, so make sure you have pessimistic, and then for order settings, this would be irrelevant as well. Okay, so yeah, so let me go back to ADSK because we had placed an iron condor there earlier. Okay, so yeah, and then here is also important, okay, that you have you have it set to the right expiration dates. DTE stands for days to expiration. So if it says 1, it means that you are selecting the right expiration date. Okay, if you are picking plot 2, okay, well, in this case it would be wait a minute. Yeah, I mean, this is irrelevant for the calculation, guys. I just got confused for a second. Yeah, this has to do with the values on the right, which are the Greeks and the PNL, but it will not change the location for your one standard deviation. That would be irrelevant. Okay, so that would be it. Okay, so if you have the values like I do, we should have the same values. The other thing that may impact that you have something different is also the expiration date selected. So if you have the same expiration date, okay, you have selected expiration plus 1 day here on the top as well, okay, and if you do that, automatically you would get the same date here on the top, which is the date you have in the bottom, and then here you have 1 for 1 standard deviation. Okay, so if you have all of these like this, I would say we should have exactly the same, and if not, I guess there is some sort of a bug that we will need to report to TradeStation. Okay. Also, one last thing I would like to get up is the about TradeStation. So you see, I'm using TradeStation 10 update 39. Okay, TradeStation 10 update 39. That's the one I'm using. Okay. So yeah, so you have different values still. So you have 140 and 151. This is really, really, really different. Really, really different. Really, really different. Yep. Wow. So that's, are you using update 39 as well? So yeah, just waiting for your response, Hal. I know there is a little delay with YouTube streaming. Oh, using 9.5. Okay, yeah. So yeah, so probably TradeStation has been working on updating the model, okay, the statistical model that they use, and therefore that's why the values are different. Okay, so it's possible that they had a bug in 9.5 and they corrected it in 10. Okay, so I would say that's what it is. Anyway, yeah. So let's continue. Okay, let's continue. The market just opened. Okay, so since the market just opened, it's now time to begin our planning. So I'm gonna get GNG, or I should say JNG, Johnson & Johnson, and we're gonna go ahead. I'm gonna start with August 30 to right click, analyze and sell, insert an iron condor just to see what are the suggested values. What are the suggested values from the platform, which is 138.5 to 125 something. So if I get back into my chart and I look at Johnson & Johnson, okay, and I said 139, so 139 is somewhere here, okay, so 139, and the bottom part is 125. So 125 is somewhere here. Okay, so if that's the case, 125.45. Okay, so 20 is less. Okay, so that's good. And above 138.60 something. So actually, you know, that 138.77 would do. Okay, so yeah, so basically we have a setup where the price of Johnson & Johnson is more or less in the middle. Where we have 3 UFOs to defend ourselves above, ruby color UFOs, and then we have below 2 emerald color UFOs, green color, and we are a more or less equal distance from those 2 purple lines, and those purple lines are located where the statistics suggest, you know, creating a range where Johnson & Johnson is likely to remain within those prices. Okay, so the question is, if I sell the 139, how much I get paid? Okay, so let's take a look at the 139 to see how much I get paid. And it seems I'm being paid 36. Okay, I am being paid 36, which is more than what we won. We won a minimum of 35, so we are getting that. And if we do the 125, I get paid $1 full, which is also more than 35. So it seems that indeed we may have a situation where an iron condor makes sense for Johnson & Johnson, and therefore I'm just gonna put it on the screen and execute the trade. So be ready to work with me on that, where we're gonna be buying the 140, selling the 139. We're gonna be doing that using August 30, 2019 expiration date, and in the below part, we're gonna be selling the 125 put and then buy below the 124 put. Okay, so I'm not fully sure, I think so, but I'm not 100% sure that the 125 and the 124 exist. So let me go ahead. Yes, they do. 125, 124, they do exist, and 139, 140, they exist as well. So let's go ahead and customize this in our simulation tool. So 140, 139, and then we're gonna do 124 and 125. Okay, so if we do that, what do we have? Well, first, you probably noticed that we have a situation with a pretty wide spread, where the bid price is 1, the ask price is 0.5. Okay, so we have a midpoint, that is not too impressive, 28 cents. Okay, and so let me check what's going on here, because oh yeah, look at that. The call side from 43 to 5, massive spread. From 61 to 12, massive spread. The put side is fine. 86 to 116, 65 to 107. That one is a little painful, but it's okay. But really, the call side, it's certainly problematic in this sense, okay? So, this trade will still be valid. We can still execute it, but we're going to have to be super, super, super demanding here when it comes to the amount of premium to be collected, okay? And given such a wide spread, I would certainly go for even more than 32, which you may be surprised, but you may get filled, because when you see this crazy spread, 5 to 43, okay, many times this is the market makers protecting themselves, okay? But if you really look deeper into that, there is your open interest here, okay? There is open interest, okay? And you may be able to get filled easier than what you think. Even though I would say market makers are really hiding their true intention by showing extremely low prices at which they want to buy, okay? So we're just gonna have to be extremely demanding on placing this particular order when it comes to capturing the spread. Now, if I bring the rules in the room, in the main screen, okay, so bringing the rules here. Let me see. So we had a few important rules to follow when doing the options trades, isn't it? And in this case, the idea was that we need to produce a credit, which is at least 15% of the difference between strikes. Okay, this is a very important rule to make sure that the trade makes sense from a risk management point of view. So what is the most you can lose in this trade? Well, the most you can lose is the difference between 125, 124 or 140, 139. So the most you can lose is 1. Okay, that's the most you can lose. And what we want is we want to collect at least 15% of 1, which is 15 cents. So, well, if you do this trade, you're going to get paid 32. Okay, so yes, we are indeed collecting what we want. Okay, we are indeed collecting what we want. Okay, but again, because of this crazy spread, I'm not going to be satisfied going for 31, and therefore I would suggest that if you're going to take this trade, just go ahead and ask, let's go for 40 cents, guys. Okay, in my case, because I'm doing this in a demo account, I'll just go for market. Okay, just please, in your case, don't do market. Just come here and just use 40. Okay, in cases like this, you may be surprised and you may get filled. Okay, you may need to have a little patience, and maybe you get filled 10 minutes from now, maybe 40 minutes from now, but certainly don't take whatever price you are given, because we are dealing with some options that, because they are far away, they are lacking on liquidity, okay, and you don't want to get hurt on the beta spread, okay? So go for 40 cents as a minimum. In my case, I'll do it market price. So place order, yes.
Order filled.
I just got filled, so I am in the trade. If I look at my managed portion of my account, I have the Johnson & Johnson trade I just entered. Notice how it's showing a decent amount of pain here, which is the spread I am suffering because I did that at a market price. So please don't do it at a market price. In my case, I have to, but you guys don't do it at a market price. Okay, make sure you shave that spread. Go for 40. And again, you may be surprised, you may get filled. Okay, so place your orders. Okay, and if you do get filled, please go ahead and let me know on the chat box. I would really like to know, if you got that price, okay? Or if you get filled at a different price, be kind and share with the community, guys, and that way other traders that are in the group right now, if they are having a tough time to get filled, let's say at 40, but you got filled at 38, well, maybe they know that maybe they can try 39, okay, and something like that. So we kind of help each other to guess the best price as possible, okay? And by the way, I'm also doing the trade with one contract, and you can choose to do it with 2, 3, 4 contracts. So all of this is going to be your choice. Just know that your risk, the most you can lose per contract is 100 minus the premium you will take in. So if you get 40 and the most you can lose is 1, so then your total risk is 100 minus 40, which is 60. Okay, so this would be your maximum risk, okay? So keep that in mind, so you know how many contracts you want to use. Let's say you want to risk $250, so then you would go for 4, because 4 times 60, it's 240, which is kind of 250, okay? So you would go for 4. Okay. Anyway, good. So we got the first one. Okay. So the first trade is done. We have a trade with Johnson & Johnson running. So let's go ahead now and look at BBY. We said that BBY probably will give us a no, but it's always worth it to check. This stock is up by 1%. We got 49% with the regular session data. Those are the stats. If we change to pre-post market, we got 48. So actually it's better to use regular session. And you know, when I see less than 50, I'm not happy, but you have also seen me at times, only in the case of non-directional trades, you have seen me utilize at times, you have seen me utilize 48, 49, something like that, because again, you have time decay working for you. So it's not a crazy thing to be done. But in any case, here, even without looking, I'll look out of curiosity, but we are not going to take the trade. Let me tell you this, okay? And I will explain why right now, so you understand what I'm thinking. So when you do it yourself, you know what you should be thinking, okay? But, 71.78, okay, that's 72, okay? And 72, in one hand you got 49, in the other hand you got 0. So it's theoretically it's 24 cents. You could argue we can take it, okay? But the reality is that I don't want to do it, and the reason why is because of the same thing I said before. If I was to do the trade leaning against that UFO and that UFO, I only have one UFO to defend myself. This is a non-directional trade with 2 days only. I will not have the opportunity to switch to damage control mode, and therefore it's too hopeful to enter the trade and hope for the best. Okay, so I would prefer to have at least a couple of green UFOs and at least a couple of red UFOs. And if I had that, I would be delighted. Okay, but I don't. So then I'm gonna have to be respectful. Okay, so good. So let's continue. So let me see. Okay. Good. So we are done with non-directional. Okay, and now we're gonna begin doing a little bit of directional analysis. Okay, we got 20 minutes to go, so we should be able to find some opportunities. Those stocks that are in the directional filter, I'm gonna start with long, then I look at short. Okay, we got a bunch of opportunities here. Okay, and I'm gonna start again, same philosophy. Begin with the ones that have potential to be liquid. Okay, McDonald's. Okay, certainly has potential to be liquid. Google, even though it's liquid, really you always have a massive spread because it's a very high price stock. It's $1,200 per share stock. Okay, so we'll start with McDonald's, okay, to see what's going on with McDonald's. Okay, and certainly we can certainly double check our common time frame on the bottom left. Okay, but we know the scanner is doing its job. So we have a confirmed climate blue dot, thick blue dot. Okay, and the price is not too far away from the average, which the average is $2 below at 200. Actually, it's $1 below 219. Okay, so what happens at 219? So let's take a look what happened at 219. So first, with regular session, we got 50% probabilities. With pre and post market, we got 49. Okay, so we would want to use regular session because it's a higher probability. Yep. Okay, so actually, I don't know, maybe TradeStation was still loading data, but it seems that we don't have the 50%. So if we don't have the 50%, we're not gonna be able to be precise enough to do this trade. Let me check again, pre-post market, 49. Okay, yeah. So the way McDonald's is being traded is in a way where when institutions got on-field orders, if they don't get filled by the end of the day, they get canceled. And that is not a good thing, okay? And therefore, we have this probability below 50, and therefore, we are just gonna have to ignore it, okay? So I'm gonna move into another stock. Let's check Roku, okay? Then we'll check Yum as well. So Roku, again, we also need to check earnings dates for those stocks, okay? But you will see that 95% of the times, the stocks that you find in the scanner for directional will provide earning dates much further in time. that's one of the reasons why the value of those options is quite low. Those options are quite cheap, and that's why they show in the column, in the row for directional trades, which are debit. Debit meaning that we buy options, and those options are cheap. That's why they're here. Okay, so most of the time, the earnings date will be far out. In this case, November 6th, because the options are cheap. Okay, so we certainly appreciate that. So what do we have? Okay, well, we have an average around 131. We have a probability of 52%. This is better than before. If we look at pre-post market, we got 49%. So that is not better than regular session. So we will use regular session. And what we will want to do is to look for UFOs around 132, which unfortunately we got nothing around 132. And again, we are normally very flexible with the location of the UFOs in the case of stocks, because as I said many times, stocks are fragile. But in this case, it happens to be that the UFOs are either much higher or much lower, and we don't have anything close by. So we're not gonna force a trade, and we're gonna move into something else, for example, Twitter. So let's look at Twitter. I said we will look at UM as well. So we'll look at UM as well. Google, we can also take a look, but I'll keep it for the last because realistically you will need a pretty large account size, which I'm sure some of you do. But at the same time, if you are in the process of learning how to trade options or have some but limited experience with options, so probably that stock will not allow you to use a small exposure. You would have to have high exposure even with options because it's a high price stock. So in that sense, I will rather look at other opportunities. Okay, I can look at JD as well, but again, let's go back to Twitter first. Okay, so Twitter, what do we have? So we have a confirmed climate, as we know, 3 out of 7 candles, so nice time to enter. Average around 42. And 42, actually we do have a UFO here, right here. So probabilities, 47 only with regular session. Let's see pre-post market. So now we are discovering, we are revealing the nature of the stock from the point of view of how the large market players are trading it. Okay, do they keep the orders or do they cancel the orders, right? That's the question. And notice how it seems that these large market players, they are actually trading much more shares of Twitter, or giving more importance to their fields based on pre and post-market data compared to regular session. We have 53% here, much better. So again, 42, actually 41.83 is the current value of the average, okay? So that is lining up very nicely with 41.86, okay, where we do have 2 UFOs overlapping each other in the 55-minute time frame. My friends, we just found a trade. So let's complete the plan for the trade. Since the climate is confirmed on Twitter, we are going to switch to the weekly time frame and activate AutoUFOs to be able to set the target. Okay, and nothing is showing up, which may be because that stock, well, actually is not making all-time high. For a minute, I was confused with another stock. For a minute, I thought that stock was making all-time high. So it's not. So, okay, so it's a matter then of loading more data in order to find where the UFOs are. Okay, so let's go ahead, load more data or push this down. Oh, actually, look at that. It was actually quite simple. I just had to move it down a little bit. So 50.24. Okay, 50.24. This would be the target for this trade. The current price is 42. So we are looking at capturing a $8 move on a $42 stock. That's pretty nice, okay? And we do that on leverage with options. That is looking to me like a pretty powerful trade, and I would be delighted to execute that one, okay? So coming back to daily time frame, climate, etc. So we have everything standardized on our common time frame chart, but now we know in the back of our mind we have a target to reach, and that target is located all the way at 50.24. So how are we gonna play this trade? Okay, how are we going to play this trade? Where to be able to execute this trade, we are going to be ready to buy a bull call spread, okay, which is made of buy a call and sell a call, isn't it? We're gonna do a bull call spread, and this bull call spread will be done using an expiration date that allows for time to target, okay, and also checks the earnings dates all together. Okay, so this is gonna be the plan. So the first thing to be done here is to calculate the time to target. Okay, and the time to target here is going to be 50.24, which is the final target we just found out, minus 4186. That was the entry value for that beautiful green UFO on the right. That is a movement of $8.38. Given the fact that the daily ATR, okay, average true range daily, given the fact that the daily ATR is $1.3, if I take this value and I divide it by 1.3021, this tells me that I may reach that target in 6.43 weeks, because we are using an assumption, as covered before, where we're going to be expecting that every week we have a full net ATR of movement. So this times 7, that is 45 days, okay? So our time to target is 45 days, okay? So we need to use at least 45 days, okay? And certainly be respectful of earnings. So if I look at the option chain for Twitter, okay? So the option chain for Twitter, Brian, should we look for the broad market climate when planning for these longer term trades? No, we should not, because remember, we are doing this in the context of a portfolio management. So when you are doing your portfolio management, you are already looking at the broad markets to define the delta exposure that you want overall in your portfolio. So you would be adding long opportunities. You would be adding more long opportunities than shorts if the broad market was in a defined up climate, and you would be adding more short opportunities if the broad market was in a defined down climate, okay, as we discussed before in one of the sharpening sessions some time ago, okay? So this is about your portfolio construction. So you don't want to look at Twitter and look at the broad market and make, you want the sky, the moon, everything to line up. I mean, if you do that, nothing wrong with that, but that would only allow you to take one trade at a time, maybe two. You don't really benefit from a portfolio hedge like we discussed before, okay? Beta weighting, I mean, you could certainly add that, okay? Because some stocks are more volatile than others, so you could certainly add the beta weighting into it, but in the end, the volatility will be determined by where are the UFOs. So if the UFOs are very close, a high beta stock will become low beta, and if the UFOs are far away from each other, a low beta stock may become high beta. So really, I would not be too concerned about the current beta, because the current beta will change depending on the climate and the location of the UFOs. So I would not add beta into the mix, just to keep it simpler, even though it's not a crazy thought. As always, Dehide, you have great ideas and certainly great observations and great experience, because obviously this is coming from a very fine thought process. But at the same time, I'm always very pragmatic, or I propose to you guys to always be very pragmatic in your trading. I am a fan of 20% of the effort to get 80% of the result, instead of 100% of the effort to get 100% of the result. So in that sense, I love to simplify, okay? And that's why I said I would forget about it, okay? But again, fine and certainly very smart thought, okay? Yeah. So anyway, so let's continue here, okay? So we got 45 days, and I just loaded Twitter, and when looking at Twitter, we got 45 days. So we could be using October 4 or October 18 actually would be the right one to use, which is 45 or more, in this case 57. But also, we need to keep in mind the earnings date for Twitter. So let's check the earning dates for Twitter, which would be October 24. Oh, so you know what? It's perfect. Perfect, because October 24 is going to be lining up with this October 18. Okay, I mean, November 15 is way past. So using that October 18, it's giving you time to target while you are lining up yourself with the earnings date. Okay, so perfect. So I'm just gonna right click, okay, to analyze and buy a vertical spread. So I will now be able to come in here and adjust everything I need to adjust. So I'm gonna erase everything here. I'm just gonna go ahead and input 41.86. That would be my entry price, okay? So this will help me to calculate the Greeks. You know I'm gonna be caring about delta. I want delta to be 30 or more, isn't it? So we'll be looking at the delta in a minute. Okay, and we want that delta to be 30 at entry, which is 41.86. Okay, so back to the chart. Okay, back to the chart. I'm just gonna push this down so I make space to have a little bit of a more realistic type of scale. Okay, so what you would do is wait for Twitter to drop, you know, a few cents, okay, from almost $1, and the moment Twitter drops $1, you will get into a trade expecting Twitter to reach 50 something. That's the trade we are looking for, which based on the climate and based on the UFOs is a trade that is doable. Okay, so therefore, to build your bull call spread, as I said before, we're gonna be selling a call, okay, and that one normally we want it to be at or above that target, so we'll make it 51, and then we want to buy a call, okay, somewhere above the entry and below the target, so we can produce those 30 deltas that we want. And all of these will be done using October 18, 2019. That would be the expiration date for that option. Okay, so of course I cannot fully plan the trade unless I use the simulation tool built in Option Station Pro. So let's do it. So we know the call I would sell would be 51. Do we have 51? No, we don't have 51. We have 55. So now let me take a look at 55 because maybe it makes no sense. Yes, 55 pesos, 8. Okay, 8. Okay, 55 is paying us 8 only. So, you know, let's compare. But, you know, I'm kind of inclined to say that we're going to be doing just a long call with nothing else. Okay, so let's take a look. Right now, if I do, oh, wait a minute. I just picked the wrong one. So 55, I want it to be on the one I sell. Here we go. So if I do 45, 55, okay, so if I do 45, 55, exactly. So if I do 45, 55, okay, this trade gives me the 30 delta I want, okay, and this trade would cost me $108 if I round up. Okay, so the risk of the trade is 108, the most you can lose is 108 because that's what you pay for the spread. Okay, 108. Okay, so that would be option number one. Now option number two, which I want to explore, is what if I just buy a call? So I'm gonna uncheck vertical. So forget about the vertical is unchecked, pretend it's not there. And now I'm gonna look for an option. If I buy the 45, if I buy the 46, okay, so if I buy the 46, it gives me 26 delta. And if I buy the 45, it gives me 32, okay, which is a little more. Now it also costs me more. So instead of costing me 108, it costs me 113. So basically it's $5 extra, okay? And I'm gonna go with this one, and here is why. Here is why. If you think of 41.86 as your entry, and you think of 50.24 as your target, okay? This trade will make you 472 minus 24, it will make you $450. If instead of buying the call, you do the spread, okay, this trade will make you 369 minus 22, let's say $350. So just by paying $5 more, if you're right, you're gonna make $100 more. So to me, that's worth it, okay? And again, in other stocks which are higher price points, instead of a $42 stock, if you were to do this with a $200 stock or something like that, then you would get different results, and the spread would be worth it, okay? But in this case, okay, I'm just gonna get rid of the spread, okay? So I also need to rectify what we have in here. So we are not gonna be doing selling the 51 calls. We will just be doing, buying the 45 call. That's all we're gonna be doing. And buying the 45 call means that we are just, we are buying a call. Okay? We're just buying a call, not a bull call spread in this case, okay? So the trade is clear, okay? Whenever that stock falls and hits the green UFO, which is 41.86, we buy the call. If it goes down, the most we can lose is 113. If it goes up, we will make 450, okay? More or less, rounding numbers. So let's place the order, and this will take us to the end of the session. So to place the order, I will just come in here and click trade. And of course, if I click trade and I make it market and I click place order, I'm gonna buy the call now, which I don't want to buy the call now because the current value for the stock is 42.54. I want to buy the call only when the price of the stock is 41.86. Therefore, I need to use an activation rule, which is set by clicking on the button based on the price of Twitter when Twitter is less or equal than 41.86. And if I was to do this and click OK, and then I click place order, and then I click, I review this, buy one of the calls. If Twitter is less or equal than 41.86, I review the trade, and I click yes. So then I got the order in the system. Here in the manage section, I have the Twitter. Actually, I also have a Netflix spread waiting to get filled, so I'm just gonna cancel this one. I don't need this one. Netflix. Sorry, cancel order. I just clicked on the wrong place. Yeah, that's it. So no need for the Netflix. That was an old trade. Okay. So we have received one order to buy to open, the Twitter call 45. Okay, and we are just waiting for this to happen because there is an activation rule, and that's why we still have it as orders instead of having it as positions. Okay. So anyway, that's it. We got it. We just reached the top of the hour, so the session is now concluded for today. Tomorrow I'll see you again sometime. I'll be looking into the briefing.com thing. Not too happy about it, but that's what it is, I guess. So if it doesn't work, I guess we'll be using yahoo.com, or I'll find another good alternative. Okay, guys, I'll be sharing that with you. Anyway, before we just go, any question? Everybody okay? Please let me know. In the meantime, as well, while I'm waiting for you to answer my okay, not okay question, I also want to remind you of a couple of things. First of all, in a few hours from now, okay, so this is loading. Here we go, get together. So just a few hours from now, we're gonna be joining Brian for his vitamin T session. Okay, guys, make sure you don't miss it. Okay, how many of you have been watching vitamin T? How do you like it? Okay, guys, please give us a little bit of feedback either here on the chat box or as well you can shoot us an email if you want to as well, but just make sure you don't miss those sessions. They are super key. Okay, and they will become more and more advanced as we go, because right now we just started, isn't it? So we have the the trading basics, the trading view. So we'll keep evolving into everything. So make sure you are connected, guys, okay? Because if you're not, then later on what's going to happen is that you're going to be like, oh wow, why is Jose doing that? Why is Brian doing that? And it's because you missed something, okay? So make sure you are connected at your own pace, ideally live, but you don't miss them, okay? So yeah, so you'll see Brian in a few hours from now, and you'll get me again tomorrow same time, 9 a.m. US standard time. We'll be doing some more sharpening, guys, okay? So thank you so much, Lisa. Very nice your comments. Thank you so much, Dihide as well. You guys take care, keep up the good work, and see you in a few hours with Brian, and then see you tomorrow again. Take care, everyone. Bye bye.